Hi there, traders. This is Brad Gilbert with a weekly kickoff. All right, let's just get you tuned up for the week. Now, the focus on the news services all week is going to be about the US non-farm payrolls, right? Talking about whether we're going to have a soft landing, okay, where equity markets keep ticking away to the top side, or whether, you know what, the interest rate cuts aren't enough and the market starts to sort of fall away, growth falls, everything craps out, especially equities as well, right? So that's what we're sort of looking at this week. And that's what the market's looking to see from those US non-farm payrolls. All right, now let's just have a look at the market. Well, actually, just come back one step, right? Last Friday's PCE price index numbers. Now, these are, they're an integral sort of reading on inflation year on year, slightly weaker than the prior numbers. Well, by 0.3%, that's a decent amount. 0.1% for month on month, right? So on the lower end of expectations, what does that do for us? Doesn't change much about what the Fed are doing, right? When you look at the interest rate probabilities here, it's a line ball decision whether the Fed does go by half percentage point or not at their next meeting. Now, the Fed has already told us that they're going to cut by 0.5% before the end of the year, right? Really fostering that transparency in their policy, which they're doing a good job with. So this week's non-farm payrolls will be, okay, are we going to get that in another big chunk or not, right? Does it change much what the dollar's doing? Probably not a lot. More about whether this is going to be a hard landing or not. Now, just looking at the charts, the dollar index, just sort of slowly jamming to the downside. Euro is finally starting to pick up some sort of level of trend along with its stepbrothers, right? You got sterling, Aussie, and Kiwi, okay, all sort of starting to trend very nicely to the top side. Dollar Swiss, dollar yen, okay, are also heading south, and the odd one out, obviously, which is not unusual, dollar CAD, right? You got oil back at $68. Okay, that's putting upward pressure on dollar CAD. So really, it's the odd one out, right? It should really be going down, but you need oil to rally for dollar CAD to go down. Now, in Japan, new prime minister, I think it's Ishiban, looking to get in. He's apparently hawkish on rates, and that's why we saw the yen appreciate on Friday, right? He's a big favorite to take over or become the next prime minister. So when you look at the hourly charts, there's shape here, right? We've got shape that we can work with. And you go into the daily charts, okay, and this is what we've been waiting for. We've just been waiting for the dollar almost to basically start behaving itself, just start going down, right? The interest rates are going lower. Everything sort of points south, with all the numbers, and that's what we're starting to get. So, Euro's dragging its feet, but sterling isn't, right? And I still think Aussie is the dark horse. Okay, high interest rates, RBA on hold. It is starting to sort of stabilize above that resistance trend line, and that sets us up for really nice trending markets, right? That's what we've sort of been waiting for so long. If you have a look at the global markets, Mondays are not a good sort of starting point. The start of the Asian session, right? You don't really. We're waiting for all the markets to reconnect, right? So not a lot going on at the moment. The majors aren't really showing us any sort of uniformity. Equity markets just plodding along. We'll wait and see where they sort of fall as the futures open up and the week gets started. Safe havens, well, the yen and Swiss sort of going down at the moment. So not much going on, right? This is very typical for a Monday. But what we can do is prepare for the week ahead, right? So whether you're looking at the interest rate probabilities, if you go through the meetings here, right, there's no meetings close by. If anything, you've got RBNZ on the 9th of October. That's probably the first one that's coming up. So central banks, you know what? Yeah, you'll see some activity here if there's variables in the data, but not a lot to get excited about. And this is even better, right? It's better for trending markets. Now, let me just sort of scroll down through the calendar here. Like Monday, okay, ANZ Business Outlook for New Zealand. Yeah, maybe. I'm like really very, very rare would I start to get excited about data on Monday. The manufacturing numbers out of China, the services data, worth having a look. That could sort of have some influence over Aussie and Kiwi in particular. But when you come through on Monday, we do have UK GDP numbers. So keep an eye on that. You get the nationwide house price numbers. I mean, there's a bunch of, mortgage, housing sort of data that's coming out. So keep an eye on that. You've got, you come into, well, actually, you've got the Tankan numbers, right? This used to be the big number out of Japan, right? Much more so than inflation. It's a massive manufacturing number. May give us some insight into what's going on over there. But as I said, Mondays, there's not a lot going on usually. Heading into Tuesday, some building approvals, retail sales out of Australia, Switzerland. And then you sort of come down. You start to get into some manufacturing numbers out of the US. These numbers are definitely worth keeping an eye on. The ISM manufacturing PMI in particular, that is a sort of well-respected number that the market will react to. Now, coming into Tuesday, unemployment rate out of the Eurozone. Yep, let's have a look. But as I said, like I'm being a bit casual with it because the non-farm payrolls Friday is where the key action is, right? You come into Wednesday, Swiss CPI, yeah, sure, have a look, but there's not a lot of Swiss data that comes out. We're looking for real tangibles that you can hang your hat on, and you get into Thursday, right? You're starting to get into the US numbers, right? The initial jobless claims, obviously a little bit of a heightened sensitivity as we get closer towards those US non-farm payrolls. You get factory orders, durable goods, and the non-manufacturing PMI numbers, right? So Thursday is definitely worth a closer look at the market. And they come into Friday and really, excuse me, the non-farm payrolls themselves and the unemployment rate, these two numbers here will be the key focus, right? We'll keep you up to date as we go through the week there. Lots going on, pretty good orderly conditions, and plenty of new data coming out this month. Now, for those traders who are checking out the rest of the site, you'll notice the pending trades, the live trade signals is operational. It's a bit more manual at the moment than we would like, but you can keep a close eye on these and definitely keep a close eye on the closed trades. Not a bad result last week. All right, guys, that's it for me. A bit of a wrap. The pretty good conditions. It's good that there's no panic in the market, right? That's what you really want to be looking for. So let's just wait and see how the Asian market really gets going. At the moment, we are seeing a bit of a risk-on profile. Euro, sterling, Aussie, Kiwi up. But we don't have all the markets sort of firing, right? The bond markets, the futures markets for the equities. But we'll see how they line up over the next 3 or 4 hours. All right, guys, have a good one. All the best. Cheerio.